Today in the grain market, soybeans did firm up. The rainfall in the Midwest is stemming some of the drought conditions right now. November futures had a 15-cent range. We rebounded after 3 different sessions testing the low. That usually means that the market is kind of building some support here, and it's becoming a little consolidative. Today we were up 14 3/4 cents. At one point we got up to 9.83 3/4. Right now, we're starting to migrate some of the option open interest into the January. We added 4,300 contracts to the call side there, so just something to take a look at. CVAL is at 22% right now. The soybean oil is at 33%, and the meal at 26.5. Corn was also higher. There's been some commercial buying. The CFTC said about 60,000 contracts. Demand is strong, even though the farmers are selling to make space for the new harvest. The market still is pretty firm. Diesel was up 8 3/4. At one point, we got up to 4.11 3/4. So we're staying well above that $4 mark, which was a big support level at this time. We're still adding to the December option open interest. We added 2,800 contracts to the 435 strike. That's kind of interesting because that's a little bit outside of our original range, was between $4 and $4.30. Now the CVAL on the corn is at 20%. The wheat futures are firm. There has been just little rain in the hard red wheat area. December rallied up to 11.5 we got up to 5.84 1/4, but then we slipped all the way back down to the 5.75 level and just up just a fraction. I mean, I think traders are a little bit cautious to get back into this market right now. Certainly this harvest time has proved to be kind of more of a choppy market. We've kind of established our ranges, and the markets have stayed within that. And certainly with the election coming up, I suspect that the market may stay in these ranges for the next couple of weeks. Now, the CVAL and the wheat is at 29.5%.